Good morning, this is Ken Long from Tortoise Capital with a quick review of a case study on intraday relative strength and then trade framing in both directions with the regression line fractal framework. In the chat room, Chris alerted us to the potential of ConocoPhillips this morning. This is a 5-day and probably 3-minute charts, and he shows based on his framework here that energy is the strongest sector of all the sector spiders. So the SPY was up 0.21. Energy was by far the strongest sector, XLE, which is a nice rebound because it's been beaten down for 2 weeks. And then drilling down further, he looks inside XLE and he finds that ConocoPhillips is leading the index, which is ahead of Schlumberger, Chevron, SPY, and ExxonMobil. So his target of interest is ConocoPhillips, and when he looks at a 5-day, 3-minute chart, you can see this thing pulling away, hitting all-time, new highs, well, the 5-day highs, and really zooming. You can see the 270 regression line is up. The regression line ribbon, the noise zone, is also pointing up, so it's extending itself. So now we want to chase, but what we're going to do is frame the trade. And so what we come up with is, this is zooming in with the regression line fractal framework now on 1-minute charts. And we notice from the price ribbon is this orange ribbon. We've turned off the candles and gone just with a 2-period exponential, or 2-period Bollinger Band, excuse me. And so we measured from the peak of the 10 to the 270, we've seen the size of the regression line fractal framework divergence, which is the max distance between the 10 regression line and the 270, and then we projected that forward. The size of that divergence here is the same as the size of this down arrow here, and this up arrow in green. So that's the strength with which the short-term traders can pull away from long-term fair value, which we define as the RL270 or the pink line. I noticed this price action in here, this a low, a higher low, and then a higher high. I'm going to treat that as evidence of support. That's going to be favorable price action because of a lazy W and takes out the previous bump's high. It had this support level after it reached the peak, pulled back, found support, and moved to a new high. So I'm going to define that price formation for this purpose of this case study as support. That's the price action I'm looking for. So now what I've seen is after achieving a high, we now have price rolling over, and this is a potential entry zone short. So now I want to see what kind of manageable stop there is, and if I were to get short in this blue circle, I could manage a 15 or 20 cent stop to the high, so that looks reasonable, and there are at least 2 of those available in the downward move, which I project forward first by hanging the red box from the swing high. So I see this price level as a reasonable retracement where it is going to find support where it found support previously in this blue zone. So if I get short here with this much of a stop, it's 2 to 1 to this line, and I can take that short because it qualifies for 2 to 1. The second target after that, or the target after that, is if I hang that red box from the 270 regression line itself, I project the price down here. So if we get failure out of this blue circle, the potential entry zone short, then reasonable targets are this price level at 72.70 and then at 72.55. And that's 2 to 1, so I can take that trade or not. Do I want to be short the strongest stock in the strongest sector in an up market? Maybe not. But I may be interested just in waiting for a retracement. So if I could find a retracement in or north of this blue zone, which is the last place that it found support, then I could trade to the top of the green bar as a reasonable price target, a test of the intraday high. That would be the size of this green line, which is the same as the size of this divergence. And so what I would look for in here is evidence of support. If there is support somewhere in this zone in or north of the blue, then I could play the rebound, and I really like that trade because I'm now buying strength on a dip in the strongest stock in the strongest sector in an upward market on a big range day. What would I look for? I would look for this kind of price pattern where I have a pullback, the first bump, a pullback to a higher low, and then takes this out. I want to get long, and it takes out this little bump with a stop just below this bump, and that's well within that 15-cent range that we saw up in here and that we saw over in there. So that's the trade frame. We've looked at this thing from both directions, made some decisions on whether or not to get short. We're using the regression line fractal framework as a way to estimate the size of a reasonable intraday short-term move, and now we frame the trade using our 2 to 1 price criteria and defined what we mean by things like support, failure, targets, entry zones, and so forth. That's all from Kansas City right now. Back to the live trading workshop. Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.